Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the Nasdaq 100. We're going to be taking some time to look at the NDX, which is the cash market, and we're also going to look at the NQ1 futures purely so we can do some volume profiling on it as well. But before we get into that, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you just want to show some general support for what I'm already doing on YouTube, then you can join Tier 1 for £5 a month, and it will also bag you an exclusive video each week that won't be available on YouTube. If you join Tier 2 for £10 a month, you'll get the same exclusive video from Tier 1, but you'll also get voting rights towards monthly deep dive videos. You'll get access to all of the educational videos on the Patreon, including my original Elliott Wave theory series. You'll also get early access to YouTube videos before they become available, and you'll also get access to the public Discord, where there is a multitude of channels in which you can engage with the community and me directly. Now, if you want to join Tier 3 for £15 a month, you get all of the things in Tier 1 and Tier 2, but you also get access to my monthly dividend calendar and stock rating system. This is where I list my favourite stock picks for the month, all of their ex-dividend and payment dates, and then give all of the stocks listed a rating out of 30 based on my own proprietary rating system. I will also offer the service of looking up any ex-dividend or payment dates for stocks you may be interested in if you can't find them for yourself, and if you have a particular stock that you are interested that isn't on the calendar of a stock rating system, I can look at it, rate it and come back to you with the results. Alright, thank you for listening guys, now let's get back to the video. Welcome back guys. Right, we're going to start here on the NDX and we're going to have a look at our Elliott Wave count, and then we're going to look at a few other things as well regarding some basic technical analysis, which we'll look at the NQ1 for. So this is the count as we have it on the NDX currently. It's a little busy, so what I'm going to do is I'm just going to remove, this is the more detailed count, and I'm just going to bring up a simplified version of it for us to focus on. And going to have a look at the recent price action. Now, we've been saying for a while that we've been waiting for a primary wave 3 correction to begin. That's what I believe is going on currently. We've seen a move down, a move up to fill a gap, having another move back down, finishing lower yesterday. The futures are currently trading up, still well within yesterday's candle, but a little bit more positive pre-market than they were yesterday at the close. So, excuse me, the first thing I want to note here is this move so far appears to be a three-wave structure. Now, it could be complete and it could come lower. We're not completely certain yet. But given our count and the zigzag we had at primary wave 2, we're not expecting a zigzag at primary wave 4 as we would expect to see alternation. Okay, so the options I can see occurring here are, we are going to either have a three wave move, okay, which looks like a zigzag but is one of two other possibilities. It's either 3 into an A, and then we'll have 3 into a B, and then we'll have 3 into a C, then 3 into a D, then 3 into an E, and this will be a triangle. Okay, because a wave 4 can we can have a triangle in a wave 4, we can't have a triangle in a wave 2. So we could end up with some kind of time consuming structure like this. Okay, a series of three wave moves into an A, B, C, D, E. We would label it like this, A, B, C, D, E, and then we would finally continue up into this fifth and final wave out into next year. So that's one possible option. We will not know until we see whatever this move down is, until we see this reverse, and we would see a three wave move which fails to make a new high, and then we would see another three wave move which fails to make a new low, and so on and so forth. And then by that point, once we've had another move back up and back, we can be much more sure of being in a triangle. Now the alternative is that we're going to come down in three waves, which we may have done with the recent low yesterday being lower than the previous low. So we've done enough to go ABC with the C not completing truncated. It's nowhere near parity yet. It's around the golden ratio. So that's could be enough, but let's assume for a moment that we get parity and we come a bit deeper on this first move. An alternative would be a free wave move like this, followed by a free wave move to a new high, or just short of a new high, to produce a flat pattern. So this would be A to here, B to here, and then we would have a 5 wave move down to another lower low. And this would be a flat pattern, and this would provide alternation with our zigzag that we had here back in primary 2. So this is a possibility as well. Now, if we come to a new high, then there are two options within that flat pattern. Coming to a new high means that we're either going to complete lower than the initial wave A down. We would label it like this: 3 into an A, 3 into a B, 5 into a C, and then whatever external swing we get in the B, we would project the length of the A from the B to find one of two extensions. We'd either be looking for the C to complete prior to the bottom of the A in a 5 wave move down, so we could finish much higher like this and actually have the C complete inside of the wave A. This would be a minor degree because we're dealing with a primary, this would be an intermediate degree as we're dealing with a primary wave 4, something like this, and this would be a running flat pattern, a 3, 3, 5, finishing higher than the C. Now the expanding flat pattern would bring the C to a lower low, okay, and this would be an expanding pattern, and this would likely take the C beyond the 123.6% extension of the A, with the likely extension being 161.8% the length of A. So these kind of flat corrections can be very misleading, because you can get what seemingly appears to be the start of an impulse, a 1, 2, 3, but it turns out to be a 3 wave move before we reverse and come down again. Okay, so a triangle or a flat pattern. The other flat pattern would be we fail to make a new high, we get a 3 wave move below the high, and then we get a 5 wave move down, and which should come to create another new low as well, but doesn't have to go any further than the expanding flat pattern does. It could go deeper, but 1-to-1 parity would be perfectly normal. So if we came up this high to just shy, then somewhere near a double bottom for completion of the C, or just slightly beyond the A, that would be a perfectly normal flat pattern coming into what we would traditionally observe as a double bottom. That's what we call a regular flat. So regular flat, running flat, expanding flat, they're all a possibility for a flat pattern. Okay, the one thing I'm not expecting to see at this wave degree, if this is correct, is a zigzag. That's the one thing I'm not expecting to see, unless it's part of a larger move, such as the triangle or the flat. Now, the final alternative is that this wave degree is wrong, and the whole wave degree needs to be downgraded. In other words, we've identified the top of a wave 3, but it's not a primary 3. The primary 3 would yet to still be in, and we'd have to downgrade this to minor degree, and this to minute degree, and so on and so forth, in order to bring this into a 5th minor wave, rather than a 5th intermediate, to find an intermediate 3 here rather than a primary 3, at which point, having had a flat pattern here at the minor degree, we could then have a zigzag here. So we would have to essentially rejig our count to have the same primary pivot, okay, but we'd have to change the count in order to fit a lower wave degree for the 3. I mean, I hope that makes sense, but essentially we'd have to count our way back through this in order to justify having another zigzag. Okay, now I'm not necessarily saying that's the case. I think we have the possibility of this morphing into a multitude of corrections, either 3 variants of a flat pattern or a potential triangle, but for the moment we're correcting in a wave 4, we've peaked in a wave 3, this is what we've been expecting to see. Now, one of the other things we would expect to see in a wave 4, whether we end up with this triangle or whether we end up with this flat with a lower C, is we would expect to visit the previous wave 4 level. Now, what we had here at intermediate degree, we had a running flat pattern, is how I've counted it. So this is primary degree we should retrace into a prior wave 4 of one lesser degree, and this would be the intermediate degree. So I would expect to see us break the top of this wave 3 either way here, and to come into at least this level, to touch this level. So whether we come down initially in the first A wave of a triangle and we breach this level before coming back in a B, C, D, E, for example, or whether we have to wait for that 3 wave move into an A, excuse me, if we just have to wait for that 3 wave move into an A, 3 wave move into a B, and then 5 wave move into a C to breach that level, then I would expect to see us come down into this prior wave 4. Okay, so now if we just have a quick look at the levels we're observing, potential targets which are traditional Fibonacci levels for a wave 4 pullback, I'll see invalidation point down here. I don't think we're going to get anywhere near that, to be honest. So wave 4 targets, here we go. So as you can see, we're not far off of the first wave 4 target, which is the 23.6% retracement. Now let's just lock and hide this level for the moment. This is where we would expect to come through, which the 38.2% would bring us through this level. And here's the 50 down here in blue. So 23.6 is at 14.533 spot 03. We're very close to it already, and a move down further in the C could bring us to this. We wouldn't fulfill the expectation of reaching the prior wave 4 of a lesser degree, but in what's been an extremely bullish market, I don't think that's a necessity. It's just what I'd like to see. It's just normal. So we could find support very soon at the 23.6, but then we'd have the issue of not having a completed alternating wave 4 pattern with our primary 2. So we would expect to see that. So perhaps it could serve as support for that initial pivot. So we could go into the A, and then we could pivot into the B, and then come down lower in the C. Okay, so the next target is the 38.2% fib retracement. This is the most typical retracement for a wave 4. And this is at 13.792 spot 58. I make it currently. And this would bring us into that area of the prior wave 4 here. So the 38.2 would bring us comfortably into that zone. And therefore you could say, yes, that's much more typical of a wave 4 correction coming down into here. But we would still have the issue of how we got here. Did we get here in a single 3 wave move, like a zigzag? In which case we'd have to, at least if we see an impulse out of here, we'd have to be suspicious of a wave degree, or the way we've expressed a wave degree with this count here, because to have a zigzag and a zigzag, there's no alternation there. We'd expect to see that. There's always, of course, the possibility also that we have a 3 wave move down to the 38.2, we have a 3 wave move up to a new high for a B wave, and then we have a 5 wave move down even lower, deeper into this prior wave 4. That's also a possibility. So at the moment we're in a correction. We don't seem to have a completed correction yet. The reason I'm leaning that way is because we've seen a lower low here on the NDX, but we haven't yet on the SPY, the SPX, or the Dow yet. So we still haven't set that lower low. I would expect them to follow tech down to a lower low, and therefore a bounce should emerge once all 3 indices are in a line. Doesn't have to be the case with the Dow specifically, because we don't have the same alternation issue, because we had a flat pattern at primary 2 as opposed to a zigzag. So we could see a zigzag in the Dow, but if we are going to see a zigzag in the Dow, then a lower low is still going to occur, or is the most likely thing to occur, because we need that C to complete beyond the A. Anyway, I'm getting distracted. So that's how I see the Elliott Wave count at the moment. Now if we just have a quick look at the action we did during the week prior to fill this gap, we don't think we have a fib on here yet, so what we'll do is we'll come in and see where we came to. So it would be very normal to have retraced into the golden ratio, okay, since we had a rejection for our wave B. So if we just come to the top, come to the low here, yes, you can see literally to the tick it's a 61.8% golden ratio. So this is what we call a bull trap. Traditionally, you have a move down, instead of thinking, you know, 3 waves for a correction, whether it's a zigzag or part of a broader correction or whatever, the initial move is going to be a 3-wave move. But what tends to happen is we have a thrust down, we rally to draw in some liquidity from the bulls who think we've bottomed, and then we have a rejection. And that's our first 3-wave move, whether it's a 3-wave move of a completed correction or the 3-wave move of a broader correction. It's kind of irrelevant. We are going to come back most of the time and try and test either the 50 or the 61.8% retracement. We came straight back up to the golden ratio at the 61.8 and then we turned down. The objective, I think, primarily for the market was to just fill this gap. You know, gaps are unfinished business from the point of view of the algorithms and the point of view of traders for that matter as well. It's just unfinished business. There's no market acceptance in this gap, and therefore we've got to test the pricing of it. Buy side, sell side, this pricing has to be tested, and that's what we did. Come up, fill the gap, excuse me, and have since moved lower. So now that's the Elliott Wave count as I see it. One more thing I would put on the chart if I haven't yet. Have I got a parallel channel for this? Yeah, so if we just zoom out for a minute and have a look at this parallel channel placement. So this is placed off of the 1, 2 primary pivot here, looking for 3, 4 could complete somewhere near the bottom of the channel. Now I know I've got it quite low down here, but that's because the invalidation point is so far away. If we just remind ourselves where that invalidation point is, targets down here. It's all the way down at 12,433 spot 05. If we were to break that and completely collapse down here, then the most likely scenario is a major market top here. That we didn't peak in a 3, that we peaked in a 5 of a 1, you know, of a greater wave 1. And then now we're coming down big time styly in a 2. I don't think that's the case. It's always a possibility, I just don't think that's the case. So if that's a primary wave 4 here, we could come to the bottom of the channel here, so possibly we could already have our A. It's just a possibility of a 3-wave move with a lower C for the A, and then we move up into a B, and then we move down into that 4 for a running flat, and then that would keep us within this channel, and then we could move higher. Now in that case we wouldn't breach the prior wave 4, so maybe we're going to do that initially with a move down. So we do the A, B, C to parity to the bottom of the channel. I'm not even sure that would bring us into the... No, it won't. Prior wave 4. So as this channel's projecting at the moment, we may not successfully get into that prior wave 4. Because everything's, like I said, if we've just been so bullish, everything's just been so incredibly bullish lately, that shallow corrections are the norm. And our wave 4 target suggests that we don't have to come down here. We've got the 23.6 waiting here at 14.533, remember? And that's a perfectly legitimate wave 4 correction. So it could be shallow, then bounce up. But the overriding issue I've got at the moment, which I want to leave you guys pondering, is the fact that we should expect to see alternation with this correction back here. This is a zigzag. This should be something else. So this could be a triangle, time wasting triangle, which could still keep us in this channel quite easily. You know, we could do something like this and then go off. Alright, so we could stay inside of this channel with a triangle. A flat pattern would have to be a running variety, I think, to stay within it. It's not essential that we do, it's just expected that we would. Whereas an expanding flat pattern would still complete perfectly legally above the invalidation point, but would break this channel using the 1 to find the 3 to find the 5. So at that point we would apply Elliott's second theory, which is to apply a channel from a wave 2 to the established wave 4 low once it comes, and we could then look at both projections instead. Alright, then I think I've waffled enough about the Elliott Wave theory now, so what I just want to do, head over to the NQ1 where we've also got a count here. It's the same count, so what we're going to do is we're just going to get rid of that for the moment, as we're already familiar with it, and we're going to bring up our momentum indicators. Okay, and we're on the daily time frame. We're going to bring up our volume as well. So this is why some people say, why do you use the NDX rather than the NQ1? When I'm building Elliott Wave counts as per the Elliott Wave principle, I want to do it in a cash market where only the open trading hours of that market are what I'm analysing. I'm not analysing pre-market or post-market conditions, just the cash market itself. However, with tickers for the indices as the SPX and the NDX, we don't get volume profiling as an option. It's not provided by the vendor, so we don't have that luxury. So I will entertain a derivative in the form of the SPY for the S&P, so I can have that benefit, and I will happily come over and have a look at the mini futures here for the for the Nasdaq on the NQ1 in order to have this benefit. So, like I said, currently green candle at the moment, still well within yesterday's bearish candle. Excuse me. So, what can we notice here? Looking at the volume profile, we have a big gulf. A big gulf in the volume profile where there's very little market acceptance. Here. We're currently sitting around the top of it with support from these previous lows, these levels here, right? So it's possible that we're looking at potentially a head and shoulders. Okay, maybe this was already the smaller shoulder and we're testing the neckline before we break. It's also possible that this is the shoulder, this is the head. We're about to produce another shoulder, come back up again. Okay, but either way, we seem to be finding support around these levels here. But we've got this gulf in the volume profile below us. Now we don't find significant volume here again in the profile until we get to around our point of control, which is within that prior wave 4 that we were looking at. So from a pure basic analysis perspective here, a move down into this area here to find support in the prior wave 4 around our point of control, having fallen through this gulf here in the volume, this would be a perfect area to find support, and then you could bounce to that higher high and then come down into a running flat or an expanding flat or whatever. So I think from that perspective, we could have some more work to do. We could head lower. If we look at the volume on these 2 days here, primarily what I'm talking about is the bearish days, we can see strong downward price move here, supported by a strong big red bar in the volume here. We can see that we had another down day yesterday, also supported by strong volume. We had weak volume during the rally. This is another sign that it was a bull trap, that this was a bounce designed to trap bulls in at the 61.8 before moving lower again. And that's exactly what we've done on stronger volume. No volume to speak of at the moment, but that's because we're trading in the futures market prior to market open. Well, it'll be interesting to see if we do get strong volume here, because if we do get a bounce, then we could say this is the first 3 wave move complete. But we would like to see a big bounce and a big increase in volume to support the move higher into what would be an expansive B, or at least a 90% retracement for a wave B for a flat pattern. Triangle, we could see declining volume throughout the whole thing, so that's not necessarily the case. We could see declining volume, short, bearish and bullish volume. Here we could see as we consolidate into a tighter pattern. Okay. Alright, now what else is there? We've come down to, on the RSI, which is set to attain close, the green 30 level here represents oversold conditions and the red 70 level here represents overbought. We've come down into oversold conditions into a little double bottom here. Okay, it's not bullish divergence. If we just bring up the RSI, you can see that they are actually lower lows. We have a low followed by a lower low into oversold conditions, so no bullish divergence with the price. We have low and lower low in price as well. If we saw low and higher low, we could call that bullish divergence, but with the weak volume, it still looks primarily can't talk, excuse me. It still looks primarily bearish at the moment. If we see a strong bounce supported by volume, we can think differently, but for the meantime, still looking pretty weak. If we look at the MACD, we can see this very strong bearish divergence which has been building up for months and months. We see the same on the RSI. It's just a series of lower highs while we've had higher highs in price. Okay, we're back below the zero bound in the MACD here, back into bearish territory. We haven't been here since May earlier in the year, and then March prior to that. Big red bearish bars building up in the in the histogram here, but not as severe as previous corrections so far. So still a lot of work to do if this is going to grow into a more bearish, deeper correction over the long term. So we'll have to wait and see if we get any kind of bullish divergence here. There isn't at the moment underlying the market. We've just got the average moving away from the signal, the blue line moving away from the orange line into negative territory. Okay then, so let's bring up our exponential moving averages for a moment. Now we have 4 exponential moving averages here. Let me just switch the volume off for a moment so we can see a little more clearly. So we have a 10 in yellow, 20 in blue, 60 in orange and 250 in green all the way down here. So there are some people I've seen calling for a test of a 250, which I think is a little extreme. It would bring us down into this prior wave 4, deep into it. So that's fair enough, and we are near our point of control around here. I don't think we need to come quite that deep, but if we were to fall through this gulf in the volume profile, we could get down here in a hurry. So that's just something we have to watch for. Any further weakness in price, well, in those circumstances, I'd be willing to come in and reconsider counting this, because the temptation then would be to look at it as a 1, 2, 3, 4, 5 wave move instead of a 3 wave move. Okay, but we're a long way from considering that yet. Either way, we've had a 10 cross over the 20. We can see how during this move up, this was not the 10 and the 20 got close to crossing but didn't here, got close to crossing but didn't here, as we continue to stay very bullish above all of the major moving averages. We've since broken down with the 10 through the 20. We're now down below the 60, but we've been in this situation before. As you can see, we've got this situation where the 10 crossed through the 20, crossed through the 60, and then we found support and bounced, and we did the exact same here as well. Got nowhere near the 250 on either occasion. Okay, so as I pointed out, we have a 3 wave move. Okay, so, and we're in a similar situation to here and here, so there's a possibility that we bounce out of here, right? And we should be looking for volume to support that move. If we don't get the volume to support it, then we can be considering the more drawn out triangle possibility if it continues to follow that path. B wave, expansive B waves can often display low volume as well, as they're a fake move, so to speak. So how do you interpret that? It's not a fake move, it went to a new high, but what I mean is it's not a true high caused by an impulse. It's not an impulsive move, it's corrective, and therefore doesn't tend to be supported by the kind of volume and momentum that we would see in an impulse. It's a bit of a fake out rather than a breakout. Okay, so that's basically it, guys. I don't think I can really there's need to go on any more than this. Look for a bounce, look for volume to support it if we are going to come up. If we don't get that volume, let's observe price action, see if we get back above these moving averages. But having put an initial 3 wave move down, I would lean towards either 3 into an A of a triangle or 3 into the A of a flat, with a B to come and a C to come later, just to provide alternation with this zigzag back here. But we'll have to wait and see. If we get a clear impulse out of here supported by volume, then perhaps the wave count is wrong. Either way, I would leave us by saying that we've broken some major moving averages. We have seen a reversal of conditions. We're in a pretty precarious position. So if another breakdown in price occurs, a thrust lower, I think, should be expected. And we still haven't seen that lower low in the Dow and the SPY. And I would expect to see that. So we'll leave it there, guys. Hope you've enjoyed it. If you're new to the channel, you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. As always, massive thank you to my Patreon subscribers. Your support is greatly appreciated. And if you're interested in joining the Patreon, there's a link in the description box below. Please leave it to the first of a new month so you don't get charged twice, which will be the day you sign up and the first of the month thereafter. So to avoid double charging, please make sure you sign up on the first. In some cases, it's better to even consider signing up on the second, because time differences with the way Patreon works, can mean that you think you've signed up on the 1st, but you haven't. You've signed up on the last day of the previous month. If that were to ever happen, I would refund you, of course, so don't need to worry about that. I'm just trying to save you the hassle. And if you're not following me on Twitter yet, there's a link in the description box below as well. Alright then guys, hopefully when I come back to do another video, my what remains of this cough I've got would have gone, because I know I keep coughing and spluttering a bit. I'm sorry about that. I'm feeling a lot better now though, so take care of yourselves, and I'll be back with you shortly. All the best. Bye bye.